Hello and welcome to LinkedIn Live, Leaders in Conversations, a series created by Lab U.S. in Canada, where I get to speak with leaders in the B Corp ecosystem who are working to transform our economic system using business as a force for good. I am your host, Jorge Fontanez, CEO of Lab U.S. and Canada, one of 7 sister organizations that certify B Corps around the world. Today, we're excited to be hosting the 4th installment of this series by bringing together 2 leaders in the B Corp movement who are transforming our banking system for good. You'll meet them momentarily. Their names are Amir, Kirkwood, and Bulbul, Gupta. Before we do that, we'd like to start with a land acknowledgement to ground our conversation. Today, I benefit from the unceded territory of the Munsee, Lenape, and Canarsie peoples, commonly referred to as New York City. I also at this time invite you to take a moment of reflection on the land that you reside upon and the historical harms done unto indigenous peoples. We also respectfully acknowledge our debt to the enslaved people, primarily of African descent, whose labor and suffering built and grew the economy and infrastructure of a nation that continues to refuse to recognize their humanity, or that refused to recognize their humanity. B-Lab, for those of you that are getting to know us and haven't met us quite yet, we're a nonprofit. We're a global nonprofit transforming the economy to benefit all people, communities, and the planet. Lab U.S. in Canada powers the B Corp movement at the local level. We operate in the U.S., in Canada, and also in Puerto Rico. And we are mobilizing our community towards economic systems change that benefits all people and the planet. In order to achieve our vision of this inclusive, equitable, and regenerative economy that we dream of, we must address our region's most pressing challenges. For us, that's the climate emergency and increasing inequity. What you'll learn today is more about how racial equity is one of 3 pillars in our theory of change that works to achieve this vision of an economy that benefits everyone. And we recognize that in order to achieve this vision, we must actively work towards anti-racism. The racial wealth gap is real. White households had 8 times the wealth of a Black family, or have, and 5 times that of Latino families. And its roots are in decades of history, policy, and systemic barriers that have guided the financial industry. Over time, the gap has widened to create large financial disparities for individuals, businesses, and the US economy as a whole. As a backdrop, you might be asking yourself, why this conversation now? So after the Silicon Valley banking crisis that we experienced earlier this year, many of us once again were revisiting the values upheld by our financial institutions and system. Many communities feel that large banks, which often exclude community members from financial inclusion and access to capital, are always bailed out at their expense. We also know that since the aftermath of the death of George Floyd, there has been an estimated $300 billion in commitments towards racial equity from the corporate sector. Yet many of those pledges remain unfulfilled. Building on our first ever Leaders in Conversation, where we focus on closing the racial wealth gap, we are zooming even further in today on the role of banking and finance in building an anti-racist economy that's rooted in justice. So let me go ahead and welcome our 2 leaders, one of a B Corp CDFI and one of a nonprofit that invests in small businesses. I'll introduce them both now. Bulbul Gupta is president and CEO of Pacific Community Ventures, one of the United States' first impact investing funds, now a nonprofit CDFI, where she is leading a restorative capital strategy to invest in underestimated entrepreneurs and build wealth for the new majority, one good quality job at a time. Bulbul has recently, and we're celebrating her appointment to the Department of Treasury's inaugural Racial Equity Advisory Council and serves on our board at Lab U.S. in Canada. Bulbul is a first-generation Indian immigrant, daughter of immigrant entrepreneurs, former entrepreneur herself, and lives in California with her daughters. Bulbul, welcome.
Thank you.
Joining us also is Amir Kirkwood. Amir is president and CEO of Virginia Community Capital, also a B Corp, and leads the organization in its mission to promote an enhanced quality of life for the communities it serves. Amir has more than 20 years of banking and economic development finance experience. Prior to joining Virginia Community Capital's social enterprises, he served Opportunity Finance Network as Chief Investment and Network Officer. Amir is a board member of Pacific Community Ventures. So this is a family affair here. And we're excited to have you both. Welcome, Amir.
Thank you so much.
Of course. So before I go into my next question, I started with a bit of, I started with a bit of backdrop. And I want the audience to know that we're going to leave some time for questions and answers at the end. So throughout today's discussion, please feel free not only to comment on what you're hearing, but also to pose your questions. And we'll be sure to look to answer as many of them today as possible. So I want to talk about your connection to this work. You each come from a different part, if not related part of the ecosystem. The community finance sector, including minority development institutions, you might hear the term MDIs in today's conversation, or community development financial institutions, we say CDFIs for short, credit unions, and others, were formed more than 4 decades ago after the passage of the Community Reinvestment Act, another acronym, CRA. So this sector, by some estimates, made up just about less than 2% of the US financial system, despite serving millions of underserved and underbanked Americans. We also noted that this June, the sector reached a major milestone. The Economic Opportunity Coalition announced it had reached its goal of moving $1 billion in deposits to CDFIs and MDIs and Black-owned banks to increase access to affordable capital in communities of color. I'll note that amongst those 20 private sector companies that made investments was B Corp Next Street. So Bulbul, starting with you, with this backdrop, I mean, so much power, opportunity, influence in the financial sector. What brings you to this work? What's a little bit of your motivation and history? And just bring into the conversation, why are small businesses key to thriving communities?
Thanks, Jorge. Glad to be here and to have joined you on the board for B Lab. I think to start off in terms of just personal connection to this work and part of what I love about my job, I came to this country as the daughter of immigrant entrepreneurs, as you shared in my bio. And while we didn't have many of the barriers that we see among small business and low-income entrepreneurs, particularly entrepreneurs of color, we, when you don't have access to friends and family capital, when you don't have access to traditional banking because you don't have a credit score or all of the other things, how do you get the economy to see you? How do you participate, right? How do you get banked if you are underbanked or unbanked? And so I think just having a little bit of that lived experience growing up and the hustle of an immigrant family-owned business, raising that early stage capital, it is really part of my passion to get to work with entrepreneurs who are going through their journey on that experience as well. And I think in terms of why small businesses are so key to thriving economies, no matter whether you're in the U.S. or in other parts of the world where I spent the first part of my career. In the U.S., the small business sector employs 50% of Americans, right? Technically, the small business community is defined up to 500 employees in the U.S., although internationally we tend to use a slightly smaller definition. So if you think about the fact that small businesses create the biggest number and proportion of jobs in our local communities, they are the culture keepers. Everybody's got their favorite restaurant or bakery or their go-to. Those are the job creators. Those are the culture keepers. And so they are absolutely key to thriving communities and making sure that we're supporting more folks on that wealth building journey of entrepreneurship and those they employ to get out of scarcity and into inclusion and financial inclusion is absolutely essential to having a thriving economy overall.
Thanks, Bulbul. I'm just sitting with your comments about what it means to be seen as an individual, as people of color in this country, but also as entrepreneurs. That theme seems to really resonate. I think, Amir, as I connect this conversation to your work, tell us a little bit about your personal story. And also it feels important to talk about like the role of the CDFI and how a B Corp like yours, the banking side, operates to elevate visibility in your communities.
Sure. So first off, thank you, Jorge, and thank you for the team at B Lab for bringing us together for this conversation. And Bulbul, always great to see you, and looking forward to some more good trouble together over the years. So happy to be here and really excited about this. My personal journey with this work really is, it starts with someone who really does care and love finance and understands the importance and significance of it to driving change in communities, to stabilizing communities, to mitigating against the risk that happens when factors that you don't control seem to overwhelm you, and it seem to overwhelm your families, seem to overwhelm the folks that you live and operate with every day of your life. And then also, just again to your point earlier, Jorge, about the fact that momentum matters, that there are both positive outcomes and negative consequences that didn't start today, didn't start with me, started, hundreds of years ago. And we're all given these chances along the way in our careers where we may have the chance to impact some change. And being a part of the CDFI sector to me is that opportunity I have. I have been in the banking sector for well over 25 years. I've worked at money center banks, I've worked at regional banks, and now I've had a chance to work directly at a bank that is a CDFI. And that's been a very sort of profound and powerful experience for me. And the reason why CDFIs, and just to sort of explain the acronym to the audience, Community Development Financial Institutions, are really specifically organized banks, loan funds, credit unions, venture funds, who have all decided that they are going to dedicate themselves to raising capital and then deploying that capital largely in place with the intent of driving not just economic growth and economic activity, but also transformational change that has social impacts as well. Some CDFIs build their models off of social determinant of health models. Some CDFIs build it off of racial equity models. Some build it off the ability to bring affordable assets into communities. But regardless of that choice, the work that's being done and the impact that's being done is really sort of changing the nature of finance in the country. The Economic Opportunity Coalition that you mentioned earlier is an example of a recognition, I believe, by larger corporations, by our federal government, by other partners, that these challenges that sit in communities are often just too difficult to solve when you throw things to the winds of the market, and you need partners who are cognizant of the need for direct engagement. And so what we're all really trying to do is figure out, how do we take this model that we think is really powerful and really place-based and really has impacts and mission as the driver behind it, and bring our own special level of commitment to it. And for me, that's what makes the CDFI sector and the CDFI movement really special.
So I'm going to ask you each to talk about your business models and how they work within the system. Amir, I'm not going to let you off the hook, though, on the second part of my question, which is why B Corp is significant, because it's not usual that we see a bank take the time to invest in certification. And as you've already pointed out, you have this advantage of operating both as a retail bank and as a CDFI, and it feels important to just like unpack that a little bit more for us.
Sure. The real, so there's two parts to that. There's the part that is why are we a B Corp, and there's the part of why we see B Corp as, and sort of the commitment to being a B Corp as critical and aligned with what we do. For us, being a B Corp is essentially a way to sort of further drive the commitment we have that every dollar we take in and every dollar we put out has to have some, not just impact, but be tied to a real commitment to something that will create change. And so that's where aligning ourselves as a B Corp is important. Being a B Corp, as you know, Jorge, and as Bulbul knows as well, is a recertification process. So you cannot just do it once and then walk away from the commitment. You're going to be judged again and again and again and again. And for an organization that is a CDFI that claims that mission drives what we do, you need to be held accountable to that standard. You need to, know that every day, everything you do, how you speak, how you go to market, how you underwrite risk, are all tied to achieving mission and driving impact. I think what makes it special to be a part of the overall B Corp community, beyond our own sort of personal, accountability it drives for us, is that the heart and soul of a CDFI is place. And when you think about what all the B Corps we work with or we see or we engage with across the country are really focused on, is really how do they have impact? How do they bring values? How do they show up in the places where they are? And every time I've been to a B Corp conference, or every time I've engaged with B Corp, that commitment that all of the companies and organizations who have B Corp status, it always reflects back to what we sort of value as well as CDFIs.
Yeah, thanks, Amir, for highlighting not just your personal kind of connection to this work, but also the place-based nature of it. What we're talking about today is really about how local economies get created, are invested in, and are sustained. Bulbul, so I'm going to come back to you because Pacific Community Ventures is unique in its approach to helping to correct some of the historical wrongs of the financial system, and talk to us about that. Talk to us about your role and how you view PCV's role in this ecosystem.
Sure, happy to. So I will start off by saying I don't have the same banking background Amir does. I've never been a banker before. I've never been in a CDFI before. I have worked with entrepreneurs for most of my career in emerging markets in the U.S., and I spent many years in impact investing before coming into this role. And I think when I think about the fact that PCV started as one of the first impact investing organizations in this country, what does it mean then to combine impact investing principles, right? Intentionality. What is your social environmental impact you want to have in the world? Very similar to the B Lab, B Corp's mission. And measurement. How are you going to measure that? Are you proving that this impact intentionality is actually proving out in your metrics? With the intent and vision for why CDFIs were created as an industry, inherently to invest in Black and brown wealth building in this country, right? So coming into this role, I said to myself, I asked the team, how are we maximizing for that as an impact metric? If that is the intent, how are we measuring that, right? How are we delivering against that? And that's where I think for me, at least, that was my awakening of realizing that while CDFIs were born out of that mission, that's actually not how we are governed or required to hold to that measurement of 100% being intended towards Black and brown wealth building. And meanwhile, over the 40 years, the black and white wealth gap in this country has exacerbated exponentially, right? So you could very easily say the CDFI industry has been a failed experiment if you are holding it to that original intent of black and brown wealth building. So with that in mind, how do we then, within our own organization, what we were allowed to do, right, within the parameters we are legally held to and want to make sure we are mindful of, how do we disrupt and innovate and push ourselves to the brink of what is possible as an impact first anti-racist CDFI? What does that look like? Almost no one on my team had ever experienced those two things combined, right? So what does it look like for us to combine human-centered design principles, right? Co-designing, co-creating with the entrepreneurs most underestimated, most affected, the community partners closest to those entrepreneurs, but furthest from resources, with impact investing design, intentionality, and measurement principles, to be able to reimagine what does a financial product or service look like that actually sees and embraces and loves Black, brown, and low-income people, right? My friend Jessica Norwood talks about this a lot. Like, what does it look like for finance or an economy to love Black and brown people? How do you bring that intentionality of design in? How do you hold that to all the product features, the rollout, the partnerships you design, the channels, the communication, the translation services, every aspect end to end? That's really fundamentally a product design and delivery experience to stay then adaptive to how that community is able to then build trust with you that you are actually going to do this new thing you say you're going to do. And that's really what drove TCV to launch our new strategy about a year and a half ago, which we call our restorative capital strategy, but informed by our driving principles of decolonizing capital, democratizing access to capital and advising, mentorship, all of the sort of range of needs small business entrepreneurs have, and being restorative in the communities and entrepreneurs we work with because of inherently the extractive nature and relationship that too many Black, brown, and low-income people and places have with finance industry, right? And so we sort of soft launched that with our Oakland place-based fund. That was our first place-based fund, to Amir's point about inherently it is about being in place and with whom you are in place, and then holding that trust to then build with those entrepreneurs and partners. So for us, it was really just about flipping the playbook of inheriting, I think, what a lot of CDFIs feel like they have to do, which is take in the bank rates and terms that they have had to do or feel they've had to do in the past, and that the bulk of the investors in the industry are, and flip that playbook to really co-designing and co-creating with community and partners up.
Yeah, you landed on a really, first of all, you've given us so much rich language to work with, Bulbul, just to sit with some of the importance of talking about what it means to decolonize the system and to restore capital for wealth creation. Shout out, as you did, to Jessica Norwood of the Runway Project, who really has been a formidable force in this work. You also pointed out not only the importance of the business model that PCV has in order to create, to translate that intention into impact, but also the products that might be created, co-created in community with that place-based nature in mind. So Amir, I'm going to come back to you now, because I think your business model has evolved, and how has it evolved? And thank you for what you said about B Corp and the role of certification, because I think what often gets confused in this very, I'll call it noisy world of standards and certification is that we are different because we are a performance standard. We hold our B Corps accountable. They must be transparent, and also they must be continuously improving, right? We're not a disclosure standard, which is a lot of where the focus and attention has been to date. And so talk to us, Amir, about continuous improvement at Virginia Community Capital and how it's shaping up.
Absolutely. I think the proper starting point is actually taking off from where Bulbul left off in noting the intentions of the CDFI fund versus the CDFI movement versus what happens once you become certified, once you become dependent upon certain sources of capital to fund your business, once you become dependent on certain sort of qualifications and certifications and reporting. It's very easy to conform yourself to the standard of the folks who fund you, for one part, and then conform yourself to the standards of kind of a constant cycle of your outputs reflecting what creates that financing input. And the cost of that is that you can become much like the very institutions that you're trying to diverge from, so that you add a different level of value to the communities where you're up to serve. And like any CDFI out there, there's 1,400 of us. VCC has had that journey. We started off with very direct intentions, funded early on by Senator Warner, then Governor Warner in Virginia, to start a community development bank in the Commonwealth of Virginia. We've grown, we've gotten to $325 million in assets, very stable organization. We've got a bank and we got a loan fund. We do advisory work. But my team wanted to go on a different journey when I joined, and collectively pushed our board of directors, pushed each other to say, we need to get a little bit deeper in the impact that we're trying to have in the communities across Virginia and in the broader than Virginia where we work. And one of the starting points with that was to say, hey, let's take our organization internally on its own DEI journey, do an audit of our organization, find the discrepancies between our values that we, profess to want to believe in, but what are we actually doing day to day in our organization? And then how does that also then inform what we're doing with the customers we're trying to serve, the selection of investors that we bring into the organization? All of those things began to come into play. And then how do we lead as an organization as well? And so coming from that DEI journey we went on as an organization, we then started a strategic planning process, and grounded in that strategic planning process was a sort of thorough review of how does the funds, the capital, the credit policies, the client selection, the investor relationships, the policies for staff development, how do they all bring about a model of inclusion, equity, and change? And so one of the critical things that came from it was that we shifted the way, and we're in the process, let me correct myself, we're in the process of shifting the way in which we work in communities to be purely place-based. And some of it is the very principles of what Bulbul talked about with PCV. As you can tell, I'm not just a member of the board, but I'm also a fanboy of Bulbul. So it is things like, really grounding the work we do first and foremost, not in production, loan production, but grounding it in engagement with the community. Who are the anchor institutions? Who are the important nonprofit organizations? What drives local business development in that community? What are the barriers to local business development? How do the things that are related to health and education feed into that economic success? And then from there, knowing all those things, what then is the role that we can play that's actually additive, supportive, and developmental, versus us just being a production force, like, pick a bank, opening up a branch in the neighborhood. And so what we realize is that might mean we're playing different roles. One role we may not be playing is the primary lender. Might be that we're helping to coordinate other partners who have capital, but just don't know how to deploy it locally. And we're using our infrastructure as a financial institution to bring other capital that's already in place in that ecosystem to bear for economic development. In some cases, it may be that we're taking a particular type of risk. We may need to be the first dollar in to bring other dollars along. We may need to lend on a certain type of part of the economy that other parts are covering well. So the simple example for me is 20 odd years in banking and finance. I've seen low-income housing tax credit finance deals done so many times. It's hard for me to justify that our balance sheet should first and foremost go to doing something that every money center bank in America does at the level of billions. What sort of value are we bringing to our investors? And what sort of value are we bringing to our communities if the organization that's designed to be high impact is just doing the same thing everyone else is doing? So these are the type of questions that we had to drag ourselves through, again, starting with it from a DEI perspective, but then really moving through into our products, into our engagement, into our infrastructure, into how we check our values, and then what then becomes the output from that. And so that's really, to me, the essence of the journey.
Amir, I appreciate, we too at Lab U.S. in Canada continue to reiterate and elevate the fact that we too are on a journey, right? In ensuring that our own work, our own systems, our own products, i.e. certification, continue to serve all communities well, and that we reduce, if not eliminate, barriers of access. This conversation, is just one of many happening in the B Corp community. So, you're already helping us illustrate also like what, not just the importance of intention, but then how we just think differently. Like, how do we radically, potentially, propose product solutions that look different than what we'll call "quote unquote" mainstream products? There are two organizations I want to highlight that are certified B Corps. One is C-Note, which is a women-led impact platform. I see head nods. And they're providing the technology and ability to direct money to entrepreneurs who are women and people of color. Solo Funds, who we celebrated as actually our inaugural guests for this series, is also a community finance platform. They've now enabled nearly 1 million loans to underserved communities. They really have looked deeply into the challenges of access to capital. Actually, there's a third, which is Clearinghouse CDFI. And I think just for those of you in the audience, our team will lift up some of the articles that are highlighting more of the best practices that we're seeing within our community so that we can continue to learn from each other, because our role here really is to elevate what works and then scale it, right? So that we can have the continued effect and impact that we desire. We also recognize that we're operating in a system. So often, yes, great to do great that we make effort to change our organizational practices, our business models, co-create products that show love to Black and Brown people, and we have policies and a set of systemic barriers that we call policy that often really reinforce some of those barriers. So Bulbul, I want to come to you. What are you thinking about in the policy space? What are you actively working on? What's the role of policy here? And what role do business leaders, do we need business leaders to take up to help move the needle?
Sure. So I would say in terms of, let me start with business leaders first, because I know we're going to talk a little bit more about policy also. I would say there's a couple of things that anyone watching this, anyone sort of listening or thinking about where to start in their organization can start. So one, I think all three of us as leaders are taking our organizations on a continuous, deeper anti-racist DEI journey, right? I think how do we make sure that we don't take any of that for granted and that we continue to adapt, shift, learn, question, look at our blind spots, be more self-aware. And with every new leader you bring into your organization and change in staff, right, you can't take any of that for granted, and having to continuously sort of have that conversation. Two, I would say any of our organizations, right, whether you're a nonprofit or a for-profit certified B Corp or not, where are you spending your money, right? All of us have procurement, even the smallest nonprofits. Where are we procuring from? Where are we spending our money? It's something John Rogers, Ariel Investments, talks a lot about at our Treasury Council that we both serve on. how do we also bring that to federal procurement? The U.S. is the biggest buyer in the world in terms of spend. So how do we make sure that we are not just sourcing more and more from sustainable organizations that the B Corp community represents, as well as reaching more underestimated entrepreneurs, communities? How are we solving more intentionally for that market failure, right? If those communities and places are the ones we are meant to intentionally reach the most, then you have to change the status quo of the policies, procurement, and otherwise that you have inherited or are working within, because that is only perpetuating status quo. It is not solving for the market failure if we know that the wealth divide has gotten exponentially worse and we decimated half of Black wealth in this country after the Great Recession, right? We can't afford to repeat that. So I would say those are at least like two kind of action steps I think about when I think about policy change that business leaders and federal policies can also work on. And happy to talk a little bit more about the federal policy piece.
Go ahead, Amir.
If I could jump in, because what Bulbul's covering is sort of important for us from a different perspective also as an intermediary. It also runs to how we raise capital. It's been a weird last 3 or 4 years for our field, in the sense that there's been billions and billions and billions of commitment to do something and very little actual money flowing through. So for us as an intermediary, if our objective is to support the B Corp that is sitting in a community that is one of the actual levers of wealth creation in that community, it's really important that we're capitalized in a way that allows us to take risk, in a way that's aligned with that community and aligned with those businesses in those communities. So for us, and for what we're really wrestling with, I think VCC as a CDFI and the field as a whole, is how do we get more and more of that actual commitment that's being claimed to be made actually deployed into CDFIs, MDIs, other intermediaries, green funds, on and on. But then also get them to understand that the type of lending that we're going to do is going to require a different type of pricing, a different type of set of terms, and understanding that the return itself has to show the impacts along with the economic, or else we're really not getting to the outcome. Because at some point, if it's just risk-based pricing, you can tap out a lot quicker than the impact will show itself. So it's the other part of the policy side is how do we create the incentives to get more and more really truly mission aligned capital to support what we do, so we can have the impact with the B Corp that's in the community on the ground.
Yeah. I know there are questions coming up in the chat, so we're going to pivot shortly to Q&A, just to call out to the audience as well to please keep bringing your questions in. Bulbul, I do want to come back to you on the work of the Biden-Harris administration and its commitments. Talk to us more about what you were saying with regards to, the last conversation, in fact, that we had in this series was with Ty Boyer-Robinson of CAPIQ, the CEO of CAPIQ, who wrote a book called The Social Impact Imperative. And it's pretty simple. Companies looking at how do you make your money, how do you spend your money, and how do you invest in your people. So I think you're taking us home here on the second point of like, how do you spend your money being a key action for business leaders to take.
All of it. I mean, all three aspects are important,
okay,
right?
All three.
More and more people are looking at where do they work? Does that align with their values? I mean, we know this very well in the B Corp community. How are we spending our money, personal and organizational? And are we enabling this to get any better? Are we extracting, right? So all of those pieces of self-awareness are important. I would say so having started my career on and off the Hill, and now in this role, sort of doing policy advocacy for the communities and partners we work with the closest in our industry, I would say there's a couple pieces, and I'll try to keep this short, is the one, to Amir's point earlier, there has been more narrative and more stimulus dollars in the COVID recovery coming than most of us have ever seen coming out of the federal government in our lifetime. Just numerically true. The challenge, the biggest challenge that most of us in our industry feel is that the very, very well-intended desire to get that money out, the stimulus dollars out, to support people, to shape a more inclusive recovery, et cetera, has, the expediency of it has challenged the ability to have the time to change the rules and regulations to actually be able to reach communities that have the hardest time reaching and accessing those dollars, whether they are community organizations, smaller and mid-sized CDFIs, entrepreneurs directly, et cetera. And so what you end up doing unintendedly, right, good intentions, but unintended consequences, is perpetuating status quo where organizations that are best set up to access that capital and have federal procurement teams are best able to access it, hoping it will have down market effects. But we know trickle-down economics has never worked for Black and Brown communities. So that, to me, remains the biggest challenge. The Biden-Harris administration has made a lot of strides with the Racial Equity Executive Order number 1, Executive Order number 2, the Asian American National Hawaiian Pacific Islander strategy, that's whole of government. Treasury was the first department to have a Racial Equity Advisory Council, but now all of the departments are being asked to have an action plan for racial equity, even in the face of some intimidation and certain legal challenges that they are very mindful of, but with good intentions, really trying to make sure that we are not repeating the mistakes and the unintended consequences of how the Great Recession recovery happened. And lastly, I'll just say really quickly, there are the role of public-private partnerships, right? The ability to make sure that private philanthropy, companies, others are activating their dollars to blend with whatever government can do. Government can only act so fast, particularly with the scale of which they are acting. So the ability to make sure we're capturing and getting to entrepreneurs and communities fast enough with a higher risk appetite that philanthropy inherently has more than any other type of capital, and blend that capital, what Amir was saying earlier, to de-risk, quote unquote, and provide that first loss layer to be able to crowd in other investors to support more of our entrepreneurs, is really how we create more of an economy that sees and loves Black and Brown people.
Okay. So there's a big takeaway here, right? It's like we need all sectors collaborating, particularly investors, to catalyze the kind of investment that we know is possible, but also, as you're pointing out, to help de-risk the capital coming from government. That might also spur more private sector actors to actually fulfill those unfulfilled commitments that we have, kind of help set the stage with. Before we turn to audience questions, Amir, I do want to just come back to you for a moment and ask, so we talked a lot today about intentions, and I'm curious how you feel operating as a regional bank within a state with certain, there presumably are advantages that you have that larger banks might say we don't have. Talk to us about the market failure that Bulbul mentioned of large banks in particular helping to get capital into the hands of communities of color.
Yeah, I think so there's roughly 5,000 banks in America, and about 50 of those banks probably control 80% of the deposits and assets in the entire banking sector. So, the other 4,950 banks are dealing with a very small share of the assets. I don't think that changes. I think that it probably grows. The cost of that, to get to your point, is that it homogenizes capital. It makes not just capital itself, but then the decisions around capital. So even though every large money center bank out there will say that they have a commitment to racial equity, they have no discriminatory practices, they have about endless numbers of federal organizations trying to monitor them. They are designed to homogenize to scale. So when you do that, at some point you inherently say somebody does not qualify because I have to push this commodity. Plain and simple. It's either it's something that everybody can have, but at the same time, a percentage of people are always pushed out of being able to benefit from it. So that's where, starting with that 4,950 and then moving down to CDFIs and MDIs, we play a very critical role because we're designed, we're built, we're intended to really address the fact that there is a gap that just can't be served when the mindset is about homogenizing and commoditizing an economy and its communities and its land and its buildings and its businesses, when in reality, the thing that most serves communities at place is someone who understands place. So that's the real cost of it all. But it's also why folks like me and Bulbul are in the business that we're in. We get it. You don't have to have a PhD in economics to understand that that's what's happening. And so if we're going to change that, we have to carve out our little small world. My $300 million in balance sheet is like not even one person's mandate at JP Morgan Chase. But I feel
That's
like
only 30 million, Amir. You're way ahead of
exactly.
maybe
So you take my 3 and you're 30, and we're like,
all the white hair comes from.
Right, exactly, bald.
Yeah, exactly.
But that money that we're doing, everything from the investors who give it to us to the communities that benefit from it, we cannot release ourselves from being obligated to have impact with it.
I just want to give credit to leaders like the two of you who demonstrate how we can create a lot of impact with little. And Amir, so the statistics you laid out really do create a stark picture in terms of how your organization, how your bank and CDFI are leading in this way, and they're more hopefully over time larger banks get to learn from. I also just want to underscore this terminology that you've introduced to me anyway, which is homogenized capital, in a moment where race conscious policies, practices, ideas, approaches are really under threat. What you, Amir, and you, Bulbul, have pointed out is that we must find good ways to account for how we correct historical wrongdoings. And if we're not taking race into account, then how do we avoid repeating, if not sustaining, the same system that created the problem in the first place?
I mean, the classic example to me is the whole model of predatory small business and payday lending that occurs. The homogenized thing is small business lending, consumer credit. Naturally, there is a percentage of folks who fall out of that range because they were born in a zip code, and therefore the odds of their business, the odds of them individually having access to things is extremely limited, and they're caught into a cycle that then perpetuates generational discrimination, generational lack of wealth creation. All in comes a solution to that commoditized model, which is payday lender who says, "You're right, you deserve access to credit. I'm just going to charge you, 25, 30,000, 30 times the rate that a bank would charge you." And so somebody then ends up getting caught into that cycle. So you're sitting here in a CDFI now, and you have to recognize that it's not just that the predatory lender is there. It actually starts with the commoditized lending, because that's where all of a sudden that choice comes for that community, where how am I going to get something that I have to have a car to get to work, because I don't live in New York City where there's a robust public transit system. So how do I get to work? I go out and get a car, and I'm now borrowing at a rate that is basically breaking my household. So you're a CDFI and you come in and you have an option now to counter that with a source of capital that recognizes the need in that community, but is not designed to essentially create a perpetuated intergenerational failure of that family or that community, because we're extracting every ounce of wealth out of that family along the way. So it's, again, recognize the commoditized piece actually sometimes leads to these sort of outliers and extremities. And that's where we come in and we play an important role, I think.
Yeah. So some of the questions that are coming in are actually to this point you're making, Amir, which is like, how do we help the average consumer household navigate where, particularly Black and brown households, how do we help them navigate their options? Bulbul, turning to you, there's two sides of well, there are multiple sides to the entrepreneurial ecosystem. One is the lending opportunities that entrepreneurs have, the access to capital that they might receive, the investment opportunities that they might get a chance to receive as well. In our ecosystem, we're thinking a lot about exactly that: venture capitals, private equity, the banking sector. How do you support the average entrepreneur to navigate this complexity, understanding that at the end of the day, impact looks like getting better terms for them that are potentially more favorable than the average mainstream product?
Yes. So it's funny. I live in Silicon Valley. We talk about venture capital a lot in just broadly in terms of when we think about access to finance or capital for entrepreneurs. Only 2% of venture dollars go to entrepreneurs of color and women combined. And that is after the Me Too movement, just to be really clear. So it is just not a viable strategy for the bulk of the small business entrepreneurs we are investing in. PCV was actually founded as an equity fund and converted into becoming a CDFI, small business lender, given the nature of the working capital, the patient capital needs that our entrepreneurs had in the Great Recession recovery. So when we think about how do we redesign, to answer your question, the second part of your question, when I say decolonize capital, what we have done at PCV to live that value, for example, is we stopped asking for collateral. We're not a collateral-based lender. We don't do SBA lending. Why are we asking about collateral? We've been pushing the SBA Community Advantage to stop asking for collateral because the bulk of entrepreneurs of color don't have the collateral needs required. Two, how are we taking out minimum credit scores? We know credit scores in this country are not favorable to people of color, low-income people, immigrants, refugees, right? Women in many cases, who, by the way, just above my age, were able to access their own credit card for the first time. So if we know that these systems don't work well, what is the minimum viable product we need to get to yes to entrepreneurs to access capital, right? So that's part of how we've redesigned by embodying the decolonized capital. We stopped asking for minimum credit score. We really stopped asking for personal assets, like how much your personal assets are worth, things like that, to really try to make sure we took our capital from about 70% of our capital was deployed to entrepreneurs of color and women 3.5 years ago, to now 92% of our capital is deployed to entrepreneurs of color and women. And we went from about 75 to 80% of our capital deployed to low and moderate income communities to 98% of our capital is now deployed to low and moderate income communities. And 86% is mapped to historically red-lined neighborhoods in this country, in our case, in California. So that's the kind of redesign principle to lead to the impact outcomes we talk about when we talk about decolonize.
That's a really tangible set of examples about how we do exactly what you are already calling us to do, Bulbul, in this sector. We're running out of time here. This has been a great conversation, so I do want to leave some space before we adjourn to ask both of you, staying on this kind of theme of what are calls to actions, what are next steps that you would invite B Corps that are listening, or any business leader listening live or later to do, to take action to create this impact to create this equitable banking sector that we're dreaming of. Amir, I'll go to you first.
I'm sorry, I was really stuck on responding to one of the questions in the which I thought was like super important.
Oh yeah. Do you want to try and address it first?
Yeah, well, yeah. I mean, the person was basically asking, how do we, how do they connect to, impact-based lenders and impact-based investors?
Yes.
And so I just was going to give a simple response. OFN.org, CDFI locator, you can go in, literally type the city you're in, what you need, and they can point you in the direction of CDFIs themselves. I think, Bulbul, you had another suggestion also.
I was just going to say the connecttocapital.com, I think it is, platform is also a national marketplace to match you with CDFIs and community loan funds in your region. Many of us are on there.
And then, of course, there's your mentorship platform, Bulbul. Would you like to mention that as well?
Sure, I dropped the link in case the team can share it. But if there are folks who are really trying to get technical assistance to underestimated small business entrepreneurs, our platform is businessadvising.org. Feel free to access that or reach out to connect.
Okay. Any other last minute burning comments before we start to wrap up?
Just on my end to all the B Corps out there, stay diligent, stay engaged, not just as businesses, but also as advocates for policy change. It all works hand in hand, and it's just important that you do it. And it's important that you hold the financial sector accountable.
Thanks, Amir, for saying that. Thank you both so much for taking the time to have this conversation today. I've learned so much on the policy front. B Corps are actively engaging in advocacy calls and congressional fly-ins. I use the quotes because they're virtual, but we've been really seeing how B Corps are seeing the benefit of being in front of policymakers. We're going to wrap up by dropping a couple of links for those of you that are interested in learning how to support Black and Brown entrepreneurs by moving your money to CDFIs and MDIs. There's also Black-owned banks. There's a playbook that the U.S. Treasury launched. And in the fall, we'll be launching the second cohort for our Racial Equity Improvement Program. Look out for that, as well as the Cash Poor Report, which was a report commissioned by B Corp solo funds on the true cost of living paycheck to paycheck. These are the kinds of insights and best practices we're looking to share. Thank you, Bulbul. Thank you, Amir. I look forward to being in touch with you both. And thank you for your good work.
Thank you, Jorge, for having us.
Thanks for having us.
Okay.
Bye, Amir. See you soon.
See you.
See you soon.